Good day, everyone. My name is Dan of SharpTrade.com, and this is another video in our playlist or series of videos, How to Begin with investing and trading. With what we know now, if we had to do it all over again, what's really in order, things to think about, and just sharing what we know, right, with how to get started with investing and trading. And once again, if you are seeing this as a standalone video, just a single video somewhere, please remember that this isn't a playlist or series of videos on our YouTube channel. So you can just simply go to our YouTube channel and find the playlist or series of videos. And again, this has all been for free. We're freely sharing, just steps of getting started. And speaking of steps of getting started, at this point, okay, at this stage in the game, a person really should not be asking, with what we've discussed already in the playlist, a person should not be asking, well, what are the different types of orders? No. No. We had two entries, the educational outline and implementation outline of getting, what you need to learn about and getting started, and there's also demo trading. You should have already been through that. You should know about stop orders and limit orders and market orders and all of those types of orders by this point. By this point, a person should have been reading quite a bit, understand what a bid-ask spread is, understand the mark, understand different types of markets. Maybe they've been reading some more. Maybe they've been going through some series on money management for investing and trading. Maybe doing a little bit more reading. At a certain point, each individual has to decide for themselves. I can't make that decision for anybody or anybody else to go ahead and open an actual account. Right? Because by this point, we've already talked about who to choose for a retail broker and things like that. That's all things people have to decide for themselves. And at a certain point, a person has to decide whether or not to do that. Now, there are some mechanics. There are some mechanics to just getting started and opening an account. First of all, at least I'm here in the States, right? Many of us in Sharp Trade are in the United States. But, you have to go through the process of opening the account. The funds have to be at-risk funds. In other words, if you're sitting there saying, as a new self-directed retail trader, if I do trading really well, I can pay off that bill, that's not at-risk funds. Okay? So there should be at-risk funds. There's just the process of opening the account, getting the account funded. And each person has to decide to do that for themselves. Nobody else can do it. Those are some of the mechanical steps a person has to take. As well, something that we're firm believers in, especially for new self-directed retail traders, and especially for those without a ton of funds to get started. They only have $3,000, they only have $4,000. We've talked about this in other entries. Regular capital contributions. Like literally fixed into the budget, totally disposable income, stuff you don't even need to think about. It's like gone each week and put into the investing account, and you don't even need to think about it. We cannot underscore that enough. Whatever that is for each individual. For some people it might be $10. For some people it might be, when I first started, and even for short-term trading accounts, literally for all types of accounts. We don't care if it's a fixed income account. We don't care if it's a investing account. We don't care if it's a short-term trading account. Regular capital contributions. When I first started, it was $35 a week. $35 a week. I didn't even have to think about that money. That was money, like, who cares? It's $35, right? Each and every week, like religion, going into that account. People should not, and we have said this in entries at Sharp Trade, people should not feel that this is somehow cheating, because you don't get to count that as your returns. It's just capital contributions. Investment firms do that, right? So why would you feel bad about doing exactly what investment firms do? They go out and they find funds. Professional traders, depending on what venue they're in, everybody's looking for the funds to invest. So why in the world would a new self-directed retail trader not be doing the same thing? That's just not logical. So again, these are part of the mechanical processes or steps. Deciding on the retail broker, there has to be disposable funds, and we would also say regular capital contributions, and that's very important, regardless of the type of account, regardless of whether it's fixed income or valuation, longer-term investing, or growth investing, or short-term trading account, regular capital contributions. The rest of the world's doing it. Why wouldn't you? So, and really, that is absolutely vital. We would say, until an account, and we're really speaking especially here of new self-directed retail traders who are not only new but low-funded, only $3,000 or $4,000 to get started. It's vital to have those capital contributions. I don't care if it's $10. Whatever you don't have to think about, right? Whatever is disposable. Until an account is at least $200,000, $300,000, that's vital. I would say even afterwards, having capital contributions is a good idea. Why? Because again, this is what firms do, right? They find funds to invest. So, yeah, capital contributions. And then there is executing the first trade. We really like the idea, and again, this is why we've made this all free. Okay, this How to Begin series, free. That's also why we have made on SharpTrade.com the Sharp Income Project. Free. Because SharpTrade as a company wants this lesson highlighted, and it is this important. We think it's a really good idea to start off maybe learning to grow some sort of fixed income account, or account that basically you can grow it to a stage where it pays you an income. Mechanically speaking, we think that's a good idea. Now, you can open other accounts to do other things, and that's fine. But just our thoughts, and that's all this is just our free thoughts out there, is we really think that's a good idea to start. Because first of all, trading for income, or I should say income, right, and having a trading account, two totally different things. A lot of people have this false delusion, and I know we've hammered on this a lot at SharpTrade, but we're going to continue to hammer on it. A lot of people think that when you're trading for a living, that's where you're drawing your income from, and that's just not true. So we really think it's a good idea, mechanically speaking, just setting up all the pieces, the first account to be something about growing income, because it's also going to acclimate you to real money being on the line, because there's nothing like having real money on the line. We'll talk about that more in this How to Begin series. So that's just our thoughts on the matter. We think the first place to get started, and it's a really good idea, and it's why we've made both this How to Begin series free as well as the Sharp Income series free, is we think it's a really, really good idea to start with growing some sort of income account. And then, yeah, if a person wants to get into trading, they can have a totally separate trading account, right? But that way it's cemented right off that you don't use a new self-directed retail trading account to pay the bills. You just don't do that, right? So these are just some mechanical steps to think about at this stage in the game, because we only have a few more of these How to Begin entries. We're closing in on just the last couple of entries and finishing this up on How to Begin, and as always, that has been what it's always been. It's always been just our thoughts, not yours, for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.